you would see an awful lot. You deal with a lot of banks, a lot of second-tier lenders, a lot of financial institutions. So how do we help, I suppose in the first instance, let's talk about first-time buyers. How do we help them to get them over the line to actually get a loan so they can actually live their dream of actually having their own home?
Yeah.
How do we help that?
We are particularly worried about the first home buyers. There's a lot of rhetoric out there from the government about assisting first home buyers get into homes, but all we see are changes being enforced upon lenders that are disadvantaging, in particular, the first home buyers. So I guess the rules are the rules, and we have to operate within those rules. So it's to try and think of ways that we can assist them within the parameters of the rules. So there are a couple of things that I would say. Save. Save like your life depends upon it. It's only usually a short period of time to be saving your deposit. It's not forever. Cut out the coffees, cut out the takeaways.
So that is true.
It helps. It certainly helps. One, because that money's going to saving, that can go towards your deposit. And two, it shows the bank that you are using your money responsibly. So that's a double whammy on the good side to save. In that saving arena, I would say, take out KiwiSaver. The minute a young person starts saving, we really encourage them to get into KiwiSaver, because that's going to be hugely helpful when you come to buying your first home, and it's savings that you can't get your hands on. So it's a really great way to help young people get into a property. So save hard, KiwiSaver, pull your savings in 3 to 6 months prior to you applying for a loan. We really want your bank statements to be showing that you are spending responsibly. So if you came to somebody like me and I could see that this was going to be an issue with a lender, one of the first bits of advice I would say is, right, we're getting on a budget for 6 months. We're going to tweak this. We're going to shine you up so that when we get to the application process, we have got a very strong chance of getting that approved. So save. I hate to say it, but one of the biggest solutions for first home buyer is the Bank of Mom and Dad. We love the Bank of Mom and Dad. Thank goodness for the Bank of Mom and Dad. The Bank of Mom and Dad has saved many a first home buyer, and that intergenerational assistance is huge. And we love that that is part of the Kiwi psyche, that Mom and Dad are there to help. But the other thing is, not everybody's got that. Not everybody's got that support. But one other thing that I think first home buyers should think about is pool your resources. So I've just done a loan application for 2 brothers and a sister. So 2 brothers and a sister pooled their resources. They're all going to live in the house together. So we combined 3 incomes, we combined 3 deposits. All of a sudden we would cross the line in a way that none of them individually could have done. So that's a really good idea for first-time buyers to explore. So that's the do. The don'ts, don't go and take on debt. Short-term consumer debt damages your chances of getting a mortgage. So hire purchase, credit cards, car loans, lay-by, buy now, pay later, that's all very damaging to your mortgage application.